Yeah, welcome to the chat. The essence of today's lesson is for us to know why we must always take our entries on the retest. Fear of missing out. This is a common fear amongst all traders, professionals, intermediates, and beginner traders alike. The importance of the retest is nothing but a natural phenomenon in the market. It is nothing but a way the market has been designed to operate, and as traders we must always at all times be patient, and all entries, quote me on this, all entries must be taken on the retest. Now, what do we mean about the retest? To begin with, let us take less than a minute to explain these candlesticks we have here for beginners so they can follow us on this. As you can see, price rallying down, creating series of lower lows, higher lows, and lower lows with a cluster of white candles. These white candles, they signify selling pressure. These white candles right here, they signify selling pressure. Meanwhile, as you can see, price rallying up, creating series of higher highs, lower highs, and higher highs, and a cluster of green candles. These green candles, they signify buying pressure. These green candles, they signify buying pressure. Meanwhile, a candle that is neither green nor white, that has no color, that has no specific color, like this candle we have right here, like this candle we have in this box right here, this candle right here, it signifies indecision in the market. So at all times the market speaks to traders in its language, either signifying selling pressure, either signifying buying pressure, or either signifying indecision in the market. So as a rule of thumb, we need to understand the color of these candlesticks in accordance to what they say. So now, what do we mean about a retest? A retest, this is what? This is the way of the market resetting itself. This is the way of the market resetting itself. Retest comes in all shapes and sizes. They can come after the market breaks a key support level or a key resistance level. Regardless of where the retest occur, the futures are the same. So now we are going to go to the chart to take a live example of what this means. Firstly, what do we mean about a key support level or a key resistance level? To begin with, what do we mean about a key support level or a key resistance level? Let us take an example right here, a clear example we have right here. Support and resistance, these are key zones in the market where we have the strongest buyers and sellers, and these zones are located in swing highs and lows, daily highs and lows, weekly highs and lows, monthly highs and lows, quarterly highs and lows, yearly highs and lows. However, for this example, we are just going to be taking a look at what? We are going to be taking a look at the weekly high and low. So right here, we are going to mark the resistance of this particular week. This is the resistance of this particular week, and we are going to mark the support of this particular week. This is the support of this particular week. So right here in front of us, we have marked the key resistance level of this particular week as well as the key support level of this particular week. We have marked both. So right here we have the key resistance level and we have the key support level. What are the indication of this? At this level you can see below here, this is the support, and the support serves as a foundation for price to drive higher, just like a foundation that is attempting to push something higher, like a spring that pushes price higher. So you can see from this point price pushed higher, while right here the resistance is more like a ceiling that attempts to push price lower. It's more like a ceiling that attempts to push price lower. So right here we can see when price drew to this point, price came down, price rallied down. So these levels, why does price behave like this in this level? The reason being is the fact that below here, and this line you can see right here, let us pay attention to this cursor as this will serve as the hand of our tutor. As this line you can see here, this is where we have the most stubborn buyers. This is where we have the most aggressive buyers, that they are ready to beat the price as far as their money can take them. And right here as this resistance, this is where we have the most aggressive sellers that are ready to push this market down. And the reason why both parties are doing this is because the buyers in this zone, the higher the market goes, the higher their profit. Likewise, the sellers in this zone, the lower the market goes, the more their profit. So the buyers here, they are trying to buy price at a very cheap rate and sell it at a very high rate, while the sellers here, they are also trying to make a profit by selling price expensive. So that is the law of the market. The market is a tug of war between these sellers and these buyers, and these zones are present in every form of the market. In fact, in these candlesticks you can see here, this top here we have a resistance here, this bottom of this candlestick we have a support here. So it is present in everywhere in the candlestick. However, there are key zones, and like this 4-hour chart where we can see this particular resistance for this week and this support for this week, this is an important zone and a very strong zone. So that's why we have marked it. So at these zones, whenever price breaks these zones, price would always draw back. So for instance, when price created this support, because in each of these candlesticks you see here, these sell candles, let me mark all the various supports that are there. You can see the eye of all these candles. When price broke from this zone trying to go up, you see all these candles here. You see all these candles, the eye of all these candles. We are marking them. Let's mark the eye of all these candles so you understand what we are discussing here. You see the eye of all these candles. At the eye of each of these candles that you see, we have resistance, we have strong sellers. We have strong sellers that have placed their order in the eye of all these candles. So just as price was rallying up in these green candles to this zone, all these resistance were broken. All these resistance were broken. So all the sellers that put their stop loss in these zones, they have been taken out because the market was just buying up without respecting the resistance. So as the market bought up, breaking all this resistance, without respecting them, as price was moving impulsively up, as a novice trader and you see price buying up, the first instinct that will come to mind is to join this big green candle here, or to join here. However, you need to be patient at all times, that because the reason why you see price just buying up is the fact that there are strong buyers in this zone and they just bought price up. But what do? You wait for the market to reset itself, because either you are buying or selling, you want the market to move in your intended direction. And when the market does so, you need to wait for the market to reset, and that is where the concept of retest comes into place. Because for the market to reset itself, as the market bought to this level, the market needs to get fresh sellers and fresh buyers for this trend to continue moving up. Are you with me? As the market reach this zone, you don't just jump in. The best thing you can do is to mark a zone here. As you have another block here, you mark another block here, and you just wait patiently. So while the market is buying up and doing whatever it wants, you just wait patiently, because if the market is in its best order, it will do what? The market will always reset itself. As the market is in a constant flux between buyers and sellers, this ever-changing balance is what creates swing highs and swing lows. So there are buyers and sellers trying to push the market in various directions. That's why you can see when the market got to this particular level, the market came down before it went up again. So it's because of the pressure that both buyers and sellers are pushing every time. So now, for instance, if you had some buyers in this zone, by the time the market got here, you can see this impulsive, this large green candle. Those that joined here, that they were not patient, by the time the market was reversing, they would have been flushed out. Those that joined here, by the time the market is reversing, they would have been flushed out. So another reason for the retest is to flush out the weak hands. The buyers that are not confident on this particular pattern, once the market is retesting, it flushes them out because they are not confident of the direction. The only reason why they are joining this green bullish buy candle is because they have the fear of missing out. It's because they lack confidence in the analysis. It's because they lack confidence as to the overall direction of the market. However, as a confident trader, since you are aware of all the possible case scenarios that the market will play out, and since you are confident, you are always waiting for a confirmation for the price to reverse, for the price to retest your zone. So while the price is retesting, you place your stop loss below this order block and you wait for price to activate your order and move. I hope we are together on this. So for instance, we have a particular engulfing pattern here which indicates a sell, and as we know, two candles make up the engulfing pattern. We have the first, which is a buying candle, buying pressure, a bullish candle, and the second, which is a bearish candle that shows that the sellers are taking over. So once the candle closes in this zone, sellers that are not confident, they will jump in. Meanwhile, they are meant to wait for the price to retest back to this zone, to this top, which the market later did. And as we have understood, the reason why the market is retesting back here is to get new hands into the market, to get fresh buyers and sellers, because you need to know that in the market at all times, as a seller, for you to make money, you take money away from the buyers, and as a buyer, for you to make money, you take money away from the sellers. So the reason why this setup is valid is because it has created fresh hands. It has chased out weak hands. Unconfident sellers have been chased out, and now you see the market retested this zone and dropped. So the market is hardwired to always retest whenever a healthy pattern is forming. If you see any pattern that does not create a retest and the market just jumps to the direction without going back to retest, it is not a healthy pattern. So right here we can see an engulfing pattern, and you can see when the market bought to this level after breaking this particular resistance, with this bullish candle, you can see when the market got to this level, it's retested back into this zone and continued buying up. I can see the beauty of retest. Even if you miss your entry here, the market accumulated and retested back here before it went up. So that is why we must always take our entries, all entries, regardless of your trading style, regardless of your trading strategy, regardless if you use indicators, fundamentals, whatever it is that you use, you must always take your entries on the retest. For instance, here we have a bearish pattern, and you can see this pattern did not retest, price just continued going down. This is not a healthy pattern. A healthy pattern, once it forms, is retest, because it shows that yes, this pattern is likely going to go to your direction, as you are having fresh hands, fresh sets of buyers and sellers alike, and the market is loading to create beautiful moments. We can take as many examples. Let's go to gold, so we can have a feel of the value of why the market should always retest. And as a trader, if you are not taking your trades on a retest, that is a very, very poor trading decision. You can see right here, when we add this bearish pattern, you go to the chart on your own, mark examples. We had this bearish pattern that broke the high, it broke the resistance of this previous week, and when it broke it slightly and price came to the downside back, what happened? Price retested back to this zone before it dropped. So now if you enter at the close of this bearish candle, you can see that your stop loss would have been wide, or you would have even been stopped out. But if you were patient enough for the retest, you can see. So retest, that is why patience is a virtue in trading. Without it, you will not achieve much. And you must at all times be patient with the chart. You must be patient with your setup to form, and you must be patient with taking your entries as well. The value of a retest cannot be overemphasized, and it cannot be overlooked, because without retest, it is impossible to achieve nothing in the market. So in this market, you do not just jump into the chart immediately you see your setup. You must always wait for the market to retest back into your zone. Let's take more examples. You can see this bearish engulfing candle. When it's formed, this is an indication for a sell. And when it's formed, you can see these two bullish candles. Markets came to retest this zone before it dropped. So always be patient enough for a retest. You can see right here, this bullish engulfing, and when it occurred, this is a sign that the market is going to buy. And you can see when the market broke this resistance, level, when it broke it, indicating that the market is going to buy up, the market retested back down before it went up. You can see how simple it is. So it is not complicated at all. All you have to do is just to pay maximum attention. You can see the market broke this zone and retested back down. So in this process, the market is getting fresh sellers, pushing price down, chasing out weak hands, people that bought in this zone that are not patient, people that bought at this close that are not patient. The market chased them out, came to this zone where we have the strongest buyers and bought up. Let us take more examples. So you can see that at all times, that's what the market would do. The market would always give room for a retest. And I said earlier, any pattern you see that has no retest, it is not a healthy pattern. A healthy pattern will always have a retest. You can see right here, the market bought up to this zone, breaking this resistance right here. And when the market bought to this zone, you can see the market retested back down here, with this week creating this rejection. The market retested back into this zone, then the market went up. So you can see and this is a healthy pattern. We can see this pattern here, you can see no retest. So once you see any pattern that does not have a healthy retest, you should just have in mind that it is not a healthy pattern and it is not a setup you should take. So as always, plan your trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, subscribe and follow for more, and share as well. Wish you a peaceful trading journey ahead.